Hi team, evening. Just want to check, can everyone hear me? If you can, just type a one in the chat, please, so I know that you can hear me. Um, just need to know that you can hear me. Just type a one if you can hear me loud and clear. All right. Awesome. Okay, we'll give everyone 2 more minutes to join. Um, thank you all for your patience. So we'll start at 9:10 p.m. sharp. Thank you all for your patience, and then we'll go straight into today. So for today, I'm going to cover some of the broad uh, things to look out for in the market, but on top of that, I'll go a little bit deeper into the opening range break, opening drive, back to open topic, which I told some of you I'd be doing. Um, just to give a few examples and just to see how often these things happen in the equity markets. All right, so these patterns do happen quite often in the equity markets, and I do want to show it to you guys so that you can kind of look out for these patterns, in the coming weeks and months ahead, because they do occur, I would say, almost on a daily basis in the various stocks that I play. All right. So, okay, we'll start with today first. Let's look at where the broader market is. Again, just a bit of a news update. We had news out of um, the Middle East again. They're shooting at one another again, which is not really a surprise given the way that, um, you know, uh, how fragmented the leadership is in Iran. So do expect that more news of escalations of some sort would come out. Israel is, of course, bombing Hezbollah again, and this has been a big no-no for the peace deal. So we might see further weakness into the week ahead. However, let's just draw out some of the patterns. So last week we said that we could come up against this, come back down, and then go up again. This is one possibility. However, this has gone much further than expected. So in terms of where the S&P 500 goes, all right, we need to actually start rethinking where this could actually bottom out. Again, this is still looked at as largely a correction within a bigger uptrend. But if I remove some of these extra sort of like uh, boxes, we are looking at a potential bottoming zone now that we have better estimates in place, somewhere between the 7245.75, but potentially as low as 7092, depending on how bad sort of the market technicals get, how bad the sell-off gets. But again, if the market does actually move towards these levels, all right, where it takes a down move, let's say it comes off here, uh, I am expecting um, the move up to be pretty solid thereafter, and the 8,000 level on the S&P 500 to be tested on the next move up. All right, that's a personal sort of point of view. But yes, it does look like this wants to resolve towards the 7245 area before sort of like bouncing off. It can actually stop short and land at the 7291 zone, all right, before it goes higher. But right now, the assumption is it will go to 7245, possibly into next week. All right, we're just over 100 points away. Again, on the ES, this is not a big distance for the ES to cover to resolve the correction to the downside. But you can see here, very nice ABC pattern. This is an A, B, and a C pattern coming down. This is a very standard correction pattern that carves out in the markets quite often. All right, so not taken by surprise, this pattern. All right, then let's look at the NASDAQ. All right, so the NASDAQ, same pattern. All right, very nice ABC pattern. We initially the thought was that this could potentially bottom around here and then push higher. However, it's dragged on and gone a bit lower than expected. So right now we need to sort of redraw some of those lines to sort of figure out where this could go. So we are looking at potentially bottoming zones. We just chop off some of this excess stuff so the chart doesn't look so cluttered. Okay, delete this, clean up the chart a bit. Everyone. Okay, and we have a potential bottoming zone in this area here, all right, for the NASDAQ between 28358, all right, and 27360. Again, it could stop short, come to 28655, and then bounce off. But the primary assumption is it will come down to somewhere within this zone or this box here, and then move higher. All right, so this is sort of the primary pattern right now that is in play, that is being watched. IWM as a representation of the Russell. Now this one has been exceptionally strong, surprising actually, given that it's broken out of resistance and actually has not suffered any drawdown, despite the fear of so-called interest rates going up. And again, just a reminder, over the many weeks that we've held market updates, the Russell 2000 is very sensitive to the interest rate sort of hike cycle piece, because of the fact that a lot of the Russell 2000 companies are actually have a very heavy leverage. So the fact that this is actually held up tells us that maybe the interest rate scare isn't as bad as we think it is. However, with what's happening in the Russell and what's happening in Iran, I'm expecting some sort of like sideways consolidation or downward move, something like this, before it resolves to the upside again. All right, so do watch for this early in the week for the Russell to start carving out some sort of corrective pattern. You can see here it's made new higher highs, but it is starting to show weakness and starting to go sideways. All right, so just something to look out for, but it is actually one of the strongest charts amongst the three big indices that we look at apart from the Dow. All right, and then if we look at rates, just a reminder again, a lot of the stuff that people have said of why things are coming off is because of inflation and of rates. But guys, like, look at this, see how far this is of any sort of like high. This was last year or earlier this year, and there was a scare. All right, this is nowhere near highs in interest rates. So again, interest rate expectations, although the Fed is saying that they may, I think on Friday was Kashkari, who said that there might be one interest rate hike. It could be just posturing to really say, oh, you know, there's one hike, so the market could come off. But if we look at the facts with regards to the US, where the US 10-year rate is, and how bond prices have been playing out. So TLT is the long-dated bond, the US 20+ year bond. You can see this is not crashing through the floor, meaning if interest rate expectations were as heightened as everyone was saying we're going to get a lot of hikes, this would be on the floor, the IWM would be on the floor, the US 10-year rate would be through the roof, all right? And we just do not have that right now. So again, in the broader scheme of things, that still supports the view that this is a correction within a larger bull market, at least for me personally. All right. Okay, now let's look at everyone's favorite trading pair, gold. Okay, so gold. We've been hoping for a bottom to come in soon, but it is looking like it wants to test this 3921 level. All right, it is still within a bottoming zone within the box. All right, it is quite oversold. Let me just look at the stochastics as well as the RSI. Okay, so we have had some oversold conditions that you can see were hit here, but wasn't confirmed by the RSI. All right, you can see the daily. Whenever you see the daily, the 4 hourly for the stochastics hit oversold, you kind of want to look for a test of the 20 level on the stochastic side to play for potential bottoming bounce here. All right, but of course, this could resolve one more time to the downside. What does an A plus bounce setup look like? An A plus bounce setup would have the following characteristics. You would have the daily and the oversold. The RSI may not be at 20, all right, which is where my oversold is, but it may be in the mid 20s or close to 30 level. Then on the 4 hourly, you would want to see some sort of like oversold thing with the stochastic side, but the RSI on the 4 hourly, ideally, A plus would be in the oversold territory like this. All right, so you can see whenever you get an oversold move like this, you get very nice big bounces. So I am looking for another oversold condition to sort of decide when to take a position. So what is my setup? My setup is I see this resolve lower, finds some sort of support. So it will look something like this. Resolves a bit lower, finds some sort of support, starts to bounce around a bit, a little bit messy like this. And then eventually I would be looking for this to be oversold here, all right, on this side here. So I would be looking for this to be oversold here, all right, and this to be oversold here. On the 4 hourly, some sort of messy like patterns, like the bears keep trying to push it low, but it can't go lower. And then I'd be looking for a pretty solid bounce, all right? But having said that, early into next week or early into trading Asian hours, do expect that gold could see pressure again to the downside towards the 3921 level, possibly testing 3740 level before we get that more oversold substantial bounce. All right, so that's early into Asia. Probably into Asia, you might get some sort of like sideways and upward chop. Same with the London session, and then during the New York session, things really start to push to the downside again. All right, so this is for gold. Silver again, you can see clinging again to the target box. We've hit the upside, but this is not looking like it has resolved in terms of finding a bottom. I would have liked to see a much stronger move, bigger magnitude. So this could still resolve lower on Monday again. All right, with early Asian trade maybe chopping towards the side, sort of giving you a very wavy like pattern in Asian hours, and then after that resolving in New York towards the center of the box, so on and so forth. All right, this could be the pattern that plays out tomorrow. Do watch out for it. I would say it is oversold. So if you are looking for short positions, really short term, stick on the 5-minute chart, 15-minute chart max. If you are looking to short gold, because the bigger picture is indicating we are quite near an exhaustion in terms of the selling towards the downside. All right. The gold silver ratio. All right, this ratio has played out quite nicely. All right, just get this other one here. Sorry. So this hit the target box here. All right, and has exceeded the target box slightly. I did say that this could actually head towards the 72 level, but I am expecting some sort of outperformance in silver going ahead into next week. So if you are looking at a pair trade, I am expecting this to sort of do stuff sideways and then sort of start resolving to the downside as some sort of corrective move before the ratio maybe resumes to the upside. All right. Usually, when you have a risk-on environment in equities, you have a move higher in silver that moves faster than gold. So just bear that in mind. When the equity correction ends and we start rallying, we could really start to see silver go and this gold silver ratio start to come off. All right, BTC. So with regards to BTC, okay, yeah, what can I say? Kind of followed the pattern we were expecting. There is still nothing really positive to say about BTC right now. I can't see any event that is going to give us any serious reprieve. But for the crypto believers out there, we are near oversold levels here on Bitcoin. All right, so we have oversold levels on the stochastics, but it is not confirmed by the RSI yet. So we could have one more flush and liquidation where we have this really go after the 50,000 level just to create one last flush and liquidation move, all right, before it eventually resolves for a much larger bounce that could retest the levels in the 70,000s again, all right? So do expect some sort of like flush down and then a fairly substantial move that could push higher thereafter, all right? But one more round of liquidations still in order for Bitcoin. Same thing for ETH, all right? Nothing pretty about the ETH chart. All right. If you're a crypto believer, condolences to you. But yes, do expect 1271, possibly even the 1000 level on ETH to be tested. All right. Fortunately, technically, there's nothing to get excited about with regards to ETH. All right. So if you're trying to find a mean reversion long in crypto, please do trade this very, very carefully. Yes, you can see here, whenever it bounces, it's like, I've mentioned this before, whenever it bounces and you see a very shallow stair step like function like this, and it's stair step, you can see that the down moves are way steeper than the up moves. All right. So you're talking about moves here. You can see here, very shallow up moves, very steep down moves. Yeah, you get a very choppy up move, but solid down move that takes it down. This again is choppy. All right. If there's no clean price action, do expect that this will resolve to the downside again. All right. So this is just the state of crypto right now. If you are trading crypto, please trade with a lot of caution if you are trying to go long. There are some of you who have done it very well. All right. And congratulations on that. All right. But let's see. Let's have a look at the ETH BTC ratio. Right. So ETH BTC, well, I'm hoping for some sort of like a resolution to the upside, but this is, yeah, this is not looking like it really wants to bounce just yet. So do expect continued underperformance of ETH relative to Bitcoin. All right. In terms of overall markets, we are looking for a potential test of the 0.025 area for ETH BTC. All right. So you are looking for a potential move to the downside here. And then maybe then it starts to bounce. All right. So just be very, very careful if you're trying to find a bounce or take a long position in ETH essentially. All right. Now, with regards to FX, let's look at dollar Swiss. This has trading exactly as we expected. Let me find the right one that I had. That's the one I tried. Yeah. So again, this is consolidating very nicely. I am expecting dollar Swiss to sort of move higher into the coming week. Again, potentially resolving, and I am looking for a test of this 83 level here. All right, before this actually starts to exhaust. All right, again, bearing in mind where dollar Swiss has come from a very big point of view, we are looking at a multi-year low. So at a minimum, I think, all right, this gets to the 83 level, all right, but it can resolve and the technical move can be technically counted as complete within the 82 region. I just think it can get to at least the 83 region and maybe the 84 region for dollar Swiss. All right. So dollar Swiss again, remain bullish on that. Dollar yen has been a pair everyone has been talking about. Everyone expected with the Bank of Japan rate hike that this pair would not perform as well. However, we have seen some very nice price action, and again, we are looking for a test of this 163 to 165 level. All right, 163.4 to 165.8 level for this to actually get tested before it starts coming off. All right. Apart from that, with regards to some other interesting currency pairs, I am actually looking at Euro Swiss again. Euro Swiss, just bear in mind, is a very strong regional trade for the European region. This could resolve significantly higher. Bear in mind that the SMB used to have a peg at 1.2. So this is way below that peg, way below levels that the SMB would be comfortable with. But right now, because of the flows, they're just not doing too much about it. But Euro Swiss could resolve into the 94 level, which would be a very nice level then again for it to fade the 94, 95 level. But again, just bear in mind the Swiss franc is at an all-time high for an export-orientated economy, all right? So this is where it came from. Again, this was the Euro-Swiss break in 2015. For those of you who are around, you know how messy this became, all right? And then you can see since then, one trend down, all right? So again, if you are trading Euro Swiss, don't overstay your welcome. All right. If you get levels right, this is a very nice carry trade, and you get levels in the 94. Don't overstay your welcome because this can resolve a lot lower than most people expect. All right. Now, some of the equities that have been quite interesting into the coming week. SpaceX has been added to the NASDAQ. All right. So the question then is, where does it go from here? All right. So right now, the 150 level is viewed as key support. So this level here, it's bouncing around here. All right. If let's say there's some sort of like shake hand piece, like, all right, let's love humanity again, move on Monday before the market open, then do expect SpaceX to sort of resolve to the upside. All right. Just remember key levels for SpaceX is at 150 to 175. All right. So 175 is somewhere around here. Why? Because that was the IPO range from 130 to 175. So anything above 175, all right, we are looking at a potential breakout. If you want to trade SpaceX, we have that option available on the Veridium equities trading platform. That option to trade SpaceX, if you find it too spicy for your own account, we actually do have SpaceX on the Veridium equities platform. All right. So if you want to transfer some risk over and you want to risk some money to make potentially a lot of money on SpaceX, the Veridium platform actually has SpaceX. All right. But this could go, the moment this breaks out over 175, playbook wise, do expect SpaceX to continue to resolve itself and try to climb to the upside. However, bear in mind that there are a lot of folks who are quite bearish on this stock because the average IPO again falls 66% from the high of the IPO made. All right, so it is very possible that SpaceX has not made its high yet. It resolves, breaks out, makes a high over this previous high here, and then it falls to 66%. That is a real possibility. All right. So again, when it comes to very hot IPOs and where the sponsors have a lot of influence, just be a bit cautious about sort of like getting overly bearish on the stock. It can go a lot longer than you expect. All right. Having said that, of course, if you caught the short, congratulations, well done. Not an easy short to catch, but it was a short that at least the prop firm that I work with was short in. They were short the stock, all right, for the prop desk. Having said that, yes, SpaceX available on Veridium. So if you get a Veridium challenge on the equity side, for those of you who are in the competition, get your 30% off. And you want to trade SpaceX, let us know. We'll get the symbol available for you. Okay, we do have people trading SpaceX already. All right. Having said that, okay, some of the key names. Now, an overarching theme in the market that I just want to sort of go through, right, is we're seeing some reprieve in software names, Microsoft, all right, even Palantir, but Google, all right, some of these hyperscaler names, very important to kind of look at where their charts are. Oracle, all right, Meta, all right. As you can see, technically there's so little at this point in time that one can really get excited about. Okay, Amazon. Although we're seeing bounces off the lows, the underperformance relative to the S&P 500 is going to be quite unacceptable to a lot of the boards. I would say in the next quarter or so. So what you could see is that you could have a situation where if AI revenues don't really start to scale, okay, there is a real chance that the boards will start to say, hey, our stock prices were market darlings. We are the Mag 7. Where are we going? You know, the market's up however many percent. We are underperforming the market by a mile. And when boards start to ask that question, there is a real possibility that capex starts to come off. And it's really odd that when you see names like Amazon, names like Microsoft start to bounce, even Palantir, many of the AI infra names start to come off big. So this could be an indication of a trade that could be coming soon, where software makes a huge rebound, and eventually, the AI infra stocks start to go sideways or start to come off, and you see a lot of that heightened expectations start to revert, especially if either AGI doesn't become a reality into next year and AI revenues don't show up as expected. This is a real possibility. Does it mean you will see a crash? I don't know. But it is a real possibility that if AI capex starts to come off, we get huge rebounds off names like Amazon, Google, Microsoft. But AI capex names like NVIDIA, AVGO, AMD, you start to see the chip names, infra names really start to come. So let's see. But this is a trade or this is a scenario that you should have right now at the back of your mind. All right, that what if the boards are looking at their charts, their price actions, all right, over the last year and saying, hey, this is not really acceptable. I mean, look at Amazon. The start of the year, all right, they are trading at this is the open, all right. And where are they now? Amazon year to date is actually down. So this is not something that any board of a Mag 7 is gonna accept, especially with the S&P 500 up for the year. Okay, so just bear this in mind. This is a big trade that could be looked at for a sort of like reversal where Mag 7 hyperscalers start to have their stock prices rebound, and then AI infra and chips start to come off. All right, which brings us to one of the key chip sector names. All right, so again, this has come off. All right, the highs. We hit our target in the highs very nicely. But having said that, all right, this is starting to chop towards the side. If this was a bullish pattern, all right, and this doesn't go much further, we could see this possibly correct until this box here. All right, the 587.25 to 562.89 level before we bounce higher. So the pattern would look something like this, dissolves a bit lower, and then goes back up again. All right, makes one new high. But you can see here, the pattern overall with regards to semi-contests of late has been very overlapping. All right, so this is a clean uptrend. All right, this is a very clean uptrend. You can see higher highs, higher lows, very, very, very clean uptrend. When trends or uptrends start to become super overlappy like this, okay, this is a warning sign that the market is not convinced about the bullishness of this overall position anymore. I've seen this a lot of times whenever we start getting a lot of overlapping. This could resolve, make one more high, and then we could start to see a significant down move thereafter. All right. So yes, with regards to SpaceX, one of the patterns that you could be looking for is a back through open or an opening drive. So I just want to go through last week what we saw in one of the stocks, FCell. This is a small cap play. Okay. But again, it would illustrate. So these are very visible on the 1 minute chart. Okay, FCell. This is an opening drive followed by an opening range break. All right. So where was the opening drive? So again, whenever you and I'll show you this on RXT later, but one of the things that algorithms like to do at the open, right, is FCell was already trading higher into the open, into the pre-market. All right. So it had bounced, was starting to trade higher. All right. And you can see at the open, the algorithms like to drive it down at first. So there'll be some selling or profit taking by people who maybe got in a bit earlier, start selling. The algorithms will on purpose drive this down to draw in shorts. But you can see how fiercely this rebounds thereafter. Now, and I'm just going to close all these other oscillator charts because they're not very useful. But you can see here on the volume chart, all right, what happens is that this, once we had a huge spike, you can see the opening drive, very consistent volume here. All right, this is a pattern that happens quite often in the market. So what you're looking for, as I've repeated to a number of people, you're looking for R vol greater than 3 to 5, all right, relative volume. You're looking for the stock to be gapping at least 3 to 5% on the day. So FCell actually did sign a contract, which is why they actually spiked. Therefore, this move at the open where it's stuffed was actually a counter to what the actual fundamental change was. And so it made for a good resolution on the opening drive. And in terms of an ATR, okay, FCell has an ATR of $3.53. Now, one of the things that you want to look for whenever you have a name like FCell is you want to look for what the short float is. So one of the sites you can go to is finviz.com. This is free, all right? So you can just visit this site here. So we are looking at names like FCell, for example. Now, what you really want to see is you want to look for the short float. Whenever the short float starts to go above 10, which is this number here, all right, do note that there is a chance that the shorts are going to get caught offside in an opening drive move, all right? And clearly, on this day, all right, the shorts were caught offside, all right? Now, if the R vol was greater than 3 to 5, okay, what we are looking for is a 1 ATR to 2 ATR move off the low. So 323 was the target, all right, for 1 ATR move. This is the low, all right, so we're going to just measure up there. And we can see this quite easily made 1 ATR here, all right, but if we look to the high, all right, this actually made a 2 ATR move, close to 2 ATR move from the low to the high. So again, whenever you see a stock that's gapping at 3 to 5%, there was some news. There's more than 10% short float. 20% is perfect, usually when it comes to a short squeeze. And RVOL is trading above 3 to 5. That's a good candidate to look at for the day. All right. You can see here, opening drive. Now, where was the opening range break? So the opening range break, the opening range is defined by where the stock is after the first 15 minutes of trade. Okay. So different firms define it differently, but 15 minutes has been found to be one of the more optimal places or definitions of an opening range break. So you can see here, this was the range between these two blue lines for the opening range break or the opening range. And as you can see here, when the stock starts to keep to the top 20% of that range, all right, it is a huge candidate for opening range break. We can see here, all right, if I remove just these lines here, this is the kind of move you're going to see, a very nice sideways consolidation. And then here, you can see that as it starts to break out, you get a volume spike. Now, I'm just going to show you one more thing here. All right. Where can you hunt this? Do you look at volume? Do you just look at R-vol? So R-vol is looked at before you place the trade. It's what you look for with regards to whether you should actually trade this stock. All right. 3 to 5 is the minimum for you to get interested. Also in the pre-market, you should be trading at least 20% of the average daily volume. Now, there's another thing, and I'm going to show you guys how to find it on the screen here. But with regard to stocks, all right, what's very interesting is that this is, okay, so this is Webull. So some of you who use IBKR, this is available too. This is the level 2. So this, you can see the order book here on Webull and the time and sales. This is actually given free by Webull. In IBKR, you need to pay for it. Okay. Whenever you are seeing an opening range break, right, you see volume, you'll see, so what it looks like on a, when this is open is there are bars on the left, which represent the sell bars, and bars on the right. All right. You will see the sell bars get chopped up very quickly, like just taken out. And a lot of time and sales prints, right, will be done here, indicating buying, and you will be able to see, you know, the volume at each price is like the price will just be stacking and stacking and stacking. It's like really, really fast, and you'll start to see very large green bars start to come in, indicating buying interest. All right. This is what you really want to look for when it comes to finding out whether an opening range break has legs. Again, your first criteria is R-vol, but during the trading hours itself, when you're actually trading it, then the volume and time on sales become very, very key. All right. So next week, let's say SpaceX has an opening drive or an opening range break you want to trade. You want to be watching SpaceX's time and sales box here. You want to be watching volume. Again, so whenever, okay, I'll go through some back through open examples later, but whenever it's a back through open with something like this, you can see that volume will start to sort of like just come down a bit, very flat. What that means is that the market is kind of in equilibrium before it really wants to break out, but it won't fall. All right, and that's a very big indication. I know this sounds a bit discretionary, but it is used a lot by professional prop desks to determine if a stock is trading correctly for an opening range breakout, right? Especially if it stays within the top end of the range like this. So there are actually 2 trades here that a professional desk would have taken. The first was the opening drive. They would have seen, and this you would need the level 2 to really confirm. You would have seen the time and sales, and you would see the red bars on this side suddenly disappear, and then huge green bars start to come in. Time and sales, this will be rolling like crazy. If this is not moving fast and furious, it means there isn't a lot of interest. But when this is moving fast and furious, it's a gap up, R-vol is greater than 3, volumes are there, you will start to see very nice candlestick moves like this. All right. So this is something you will need to trade equities. So when it comes to equities, the one advantage you have over FX is that you have a time and sales window and you can see the level 2 order book. All right. The level 2 order book in itself can be deceptive because orders can be hidden. There can be iceberg orders. There can be hidden orders where orders are just repeating. It could be a large amount being sold by the same level again and again. But the time and sales doesn't lie. All right, so you want to watch the time and sales as the confirmation. And again, if you really, really, really want to just look at a chart because you don't have volume 2, look at a 15-second chart. All right, the 15-second chart will tell you. So you would have one view of, say, the 1 minute and then one view of the 15-second chart. All right, the 15-second chart is about your equivalent for looking at time and sales in a visual format. So the 15-second chart is going. Likely the tape is also running. All right. So this is FCell opening drive. All right, very nice opening range break here. A perfect opening range break you can see here. All right, this was a very nice pattern that played out. You realize here it did not come back and visit the range. Whenever an opening range breaks out, test the range again. All right, what the algos like to do is they like to break down, test the range, stop everybody out, go back up to resistance here, get you to short, stop you out here. All right, then it goes down here. All right, goes up again. People start going long here, then it breaks down, stops you out, and then it resolves to the upside. All right, that's how algos chop up opening range break, guys. All right, sometimes it doesn't, and even for the upside resolution, it may not even be so nice. It could be like just here, and then after that, it just goes sideways all the way. So again, that's why when it comes to playing opening range breaks, back through opens, what have you, okay? So back through open is essentially an opening range break that happened and within the first 15 minutes of trade. Opening range breaks are after the range has formed. Opening drives are usually within the first 1 or 2 minutes of the trade session opening. Okay, but this is a very nice opening range break that happened. And as you can see, all right, this has happened from here to the top here. Very nice move. If you used the 9 EMA as a trailing guide, you would have done quite well. All right, but the 21 EMA was the ultimate guide, and you can see in this case, once the 9, so this is actually the stop out signal you're looking for. When the 9 crosses below the 21, that's your stop out signal. All right, for a trade if you are holding an opening range break long position. It works better on the long than it does on the short side. Okay, in the short side, your opening range break needs to play out by 10:30 or within the first hour of trade. It has to just drive the price down, because if it doesn't, what happens is that you actually, start to see the stock trend back towards VWAP, reclaim VWAP, and then once VWAP is reclaimed, usually the bears start to lose control. Okay, so a very good long position is always determined by how fast over VWAP a stock goes. So you can see here, this is very common in a back through open or even the first minute of opening drive. The stock tends to dip below VWAP, but reclaim it almost immediately or very quickly within 2, 3, 4 candles. VWAP is reclaimed, and I'll show you some other examples later. But the 9 EMA usually starts to cross VWAP. Now, when the 9 EMA starts to cross VWAP, i.e. here, this is what you're looking for, that's usually the point where the uptrend is confirmed and the stock really starts to gain momentum to the upside. All right, so this is one example. Now, I'm going to go to RXT. Okay, so this stock was in play, and I'm going to go to the 23rd of June. Okay. So on the 23rd of June, okay, this was an opening drive. Okay, trade. Now this example of an opening drive trade, again, you can see here, and I've said this a couple of times already, within the last 3 to 5 minutes before the open, right, watch for algos to do this. All right, start trying to fake out the long positions, and then it tends to just drive into the open. But this was a very good example of an opening drive. All right. And from the open, you can see here, look at the massive volume bars. All right. Pretty massive volume bars on balance relative to the rest of the day before that. All right. So this stock was definitely in play on the 23rd of June. All right. It was technical play. There wasn't really any news on it. But let me show you another algo fake out that happened on the 17th of June, because this one I actually got caught by the algo fake out on the 17th of June. All right, so this is the 19th. Okay, so this was it. All right, you see this here? This here? This stock was super in play, and the algos faked me out. I thought like, oh no. I was actually long into pre-market, and then I was like, oh no, this might actually dip. Then I was thinking it would dip here and then go here. But the algos I'm noticing as of late, right now, it happened in Palantir and ServiceNow on last Monday, actually on Monday, where it dipped at the open, gave 3 bars, 4 bars, 5 minutes before, showing that this thing would collapse, and then like boom, look at that opening drive that happened thereafter. So watch out for this algo fake out. The volume was quite elevated in the R vol. This was trading at about 3+ R vol before this. So that was actually an indication that this was super in play. But you can see algos love to fake out and shake out long positions with these kind of fake out moves. So when you're trading this, just keep an eye out for, I think this could be a fake out. One way you could trade it so that it doesn't kill you is you can wait until the open with the expectation that this is going to fake out or fake you out. And then at the open, you kind of want to see this kind of long bullish wick candle. So it dips at the open and then reclaims very fast. And then you take your long position for the drive and you leave your stop at the low of day. But you can see here, even if you miss candle 1, candle 2 gave you an opportunity with the candle 1 low. All right, so it opened, all right, here, all right, dipped into the candle, it bought a long, and you can see here, again, just a reminder, once VWAP is reclaimed, then you're looking for this. This is your confirmation, the 9 crossing V. See how much acceleration starts to happen after the 9 reclaims VWAP. This is the indicator. By the way, there is a trade that a lot of the prop firms call, a 9 cross VWAP or fashionably late or whatever name they have. This is the fashionably late in motion. And once this crossover happens, you don't have to leave your stop here. You can leave your stop actually once you're here, just a little bit about say 10 cents below VWAP, because this should not dip below VWAP again. All right, in a very nice confirmation of the option. So if you were a mean reversion trader, you would have tried to play this, but a trend trader would have said, I will wait for this occurrence, the 9 cross 21, to play the continuation. You can see, serves the 9 EMA very nicely. And then again, this is the point where you would have created your stop out here. All right, once the 9 cross the 21, you can say, okay, I think it's over. It didn't make a new high again, but you could have scalped this saying like, okay, 9 cross back above 21, but this is not easy to capture. And of course, if you look at later in the day, all right, it did eventually reclaim, okay? The question is, where would you have gone long if you were still up later in the day? And bear in mind, this is the graveyard period, yeah. So this is a very dangerous period to trade because volumes are light. you get a lot of manipulation, but you would be looking for this kind of sideways consolidation again before you wanted to take a long position. So there's a range here that it was trading in. Once it broke out of the range, then you could take your long position again. But if you can stay awake, again, once the 9 crossed the 21 here, you could have created your stop out, all right, point here. So cross below, or when this breaks the 21, whichever is first, if the candle breaks the 21 on the 9 breaks below 21, then you create your stop out, all right? So this is a very common pattern that happens almost daily on stocks that are in play. How do you find stocks that are in play? All right, so this is a very important question. So you can go to stuff like Webull, whatever stock scanner you have, go to markets, quite simply, all right? Scroll down, let me just show you. All right, see. Okay, sorry, yeah, so this is it. And then just, oh, I know why. This is Singapore, right, cool. So go to top gainers here. All right, and then what you want to just do is you want to look at the top gainers. Then you want to sort of like note, in terms of the top gainers, right? Try to look for those if they are very small caps. So you can see some of the market caps are tiny. All right. Try to look for those with very, very high squeezes. But along the way, you will find sometimes some of the bigger companies, Arcadia, so on and so forth. Look for stuff that you're comfortable to trade. But if you're looking at the small cap side, try to make sure that you're looking at stuff that has a shortfall of 10 to 15%. And in terms of the total volume traded for the day, like this is huge, right? $2.27 billion in or 2.27 billion shares of volume traded within the day. Abnormally high volume. That's a very good indication that this is in play. Okay, so you can set your screener by just sort of like saying I want a certain market cap, I want a certain average daily volume. This is something that you can do with a stock screener. All right, I have another stock screener that looks like this. Also, this is Benzinga. All right, you can set it. You can see, you can check the news. So you set what is the gap percentage, what is the average daily volume, how much of the volume is traded, or what percent of the volume has turned over already. These are all things that can be done. All right, so Benzinga is a very good place to also go to if you want to create a stock screener, a custom stock screener. All right, so let's go through a few more examples. So SpaceX is something that's going to be in play next week, but on the 24th of June, there was a very nice back through open that occurred. So let's go study that. Okay, and again, for those of you who are on TradingView and you are trying to look at the charts similar to me, make sure you have extended hours on. All right, so you can see here it's found at the bottom right, but you do need to be on a paid plan for you to actually enjoy the extended hours trading. All right. Now, having said that, this was the open for SpaceX. All right. So we draw a line here. Take down the volumes a bit. Okay. So as expected, all right. So this of course spiked a bit, then came down. You can see this came down through VWAP. All right. Very quickly. But again, noticeable pattern. That's what I've said. You would start to see things like declining volume. All right, so the volume, and then you can see an exhaustion here. All right, and again, I've often said this is what you want to see. A risk candle or two risk candles followed by some sort of pullback like this. All right, a third candle pullback. Then where you will go long is you will go long the moment this candle here exceeds this candle high here. All right, and then use this as your stop. Okay, so i.e. you would take your long position right about here. Okay, you would use a stop right about here. Okay, very tight stop. What are you looking for? The first is a test of open, which we see here. So you would start to take 50% off here at the test of the open. Okay, and you would hold the other 50% off using this low here now as your next stop. All right. Now, do notice that once this has reclaimed VWAP, see how the 9 EMA slowly catches up to this. And then, because the 9 EMA caught up, we had a confirmation and it didn't go back below. Although this is a clear fake out that was happening to test 21, but it held. You can see that it then started to accelerate again to the upside. And once the back through open cleared, all right, you can see that this was actually, so this was 50% off. This back through open became an opening range break. It cleared again. You don't see a test of the range once it has happened, but you can see that once it broke the range again down here, all right, volume is in, all right, and then you just ride and you would use this point here. You could get faked out here. It's possible. So there are 2 points you could have been faked out. So you might have taken the second 50% here. Okay, it's very possible. All right, because again, this is a perfect chart. So it's easy to say you would cut it here, but more likely you may have cut some of your position here. All right, or the other 50% here. Even then, still a very good risk reward trade, because if you measure, all right, our entry was here, all right, at the high, okay, and we will be stopped out here. But look at this reward versus this risk here. All right. So when you're trading intraday equities, especially on eval platforms, these kind of back to opening range break strategies, very good, because these are patterns that play out almost every day on stocks that have heavy volume and are in play. All right. And let's study a little bit further. We had another one like BlackBerry. Okay, so BlackBerry, we had an opening drive on the 26th of June. All right. So this is the opening drive. This stock had, again, as you can see here, dip at the open. There was no trades in the pre-market, or very minimal trades in the pre-market. Dips at open, reclaims VWAP immediately, and look what happens. All right, starts to just go. In this case, the 9 EM was just simply above. There was news of this being an AI stock. So that was what was causing the opening drive. And once it's open drived, all right, you can see it serves the 9 EMA nicely. Arguably, one would have been stopped out here. All right, but if you caught this VWAP reclaim, this would have been an okay area to get stopped out at. All right, and then if you were looking for a re-entry point, you would be looking for a reclaim again of the 9, so somewhere around here, and then just surfing the 9. So this would have been a re-entry point here. All right, and then just surfing the 9. All right, this is a very nice opening drive. You could argue that within the first 15 minutes, the range was established. All right, so the range would have been here, here. This was your opening range, okay? And you can see, doesn't come back to test, huge, or nice volume candle on the breakout, okay? Down here, doesn't come back to really test, and then reclaims the 9, stays above the 9, and just serves it all the way. All right, so pattern that occurs again and again. There was another opening drive for BlackBerry. So whenever there's news, so BlackBerry had news of the of it being an AI stock actually from the 25th, which was here. So you can see 2 opening drives in a row for a stock. So when something's in play, when a piece of equity is in play, always keep an eye on the equity for at least 3 to 4 days, because you can go 2 or 3 times at that equity piece. You know, rather than trying to find a new trade idea every day, just look at what you traded yesterday. Sometimes that's the thing that goes again. Right here from the open get-go, it just wham, you know. This is what I mean. So if you miss this, okay, so let's say you're playing an opening drive and you miss this initial move. Where is a next best entry point? As you can see here, the 9 was below this, but where I would have tried and attempted another move was a test of VWAP here. So the VWAP, 2-day anchored VWAP, is something that I've shared with some of you. So the settings you want to have are, you can have H plus L divided by 2, anchor period session, or you can anchor it to, to the session. Okay, chart. So these are my personal settings for 2-day VWAP. All right, it's 2 sessions. Okay, so just 2 minutes. All right, but you can see here the moment test VWAP. All right, so again, just show you guys again. Okay, time frame is 2 minutes. So H plus L over 2, anchor period session. All right, which helps you anchor to the open. All right, so you can see here, and then once the 9 EMA catches up here, you can see this thing really starts to accelerate. Arguably, this was quite choppy here, but I would have attempted along here. All right, and I would have placed my stop at the low once it started to go. All right, so tested VWAP, I would have placed a stop here. So when you take the first position, you can place your stop here. Okay, but once it starts to go in your favor, move the stop up to the low that was established. Okay, try not to place a stop too close at the start because it can wake you out. Place it at, you can place it at the low here if you want to give it more allowance, or the opening price. All right, that's fine. But when you test VWAP and there's an opening drive in play and in motion, high R vol again. There was more than 20, I think it was like 30-something% of the volume was traded in pre-market. This is something you want to watch for. And then, as you can see, if your trade will stop up here, it would have come close to stopping you out, but you can see it just starts surfing. And then again, as per usual, we would stop out when the 9 crosses the 21, all right? Because then the rest of the day is not an easy session to trade. And then day 2, boom, you got another chance, another opening drive. All right, let me show you another back through open. So 3 setups that we have been talking about. The opening drive, the back through open, and the opening range break all happen within the first hour of trade. So if you say, I don't want to stay up to 2 or 3 in the morning, these are literally the setups you can look at so that you don't stay up to 2 or 3 in the morning. All right, you can actually trade the first hour of the day and you are done. All right, and these are trades with very defined cap risk reward limits. you can use again and again for things like an equity eval prop account. Okay, these work very well because they have such defined risk that it makes it easy for you to actually manage that risk around the loss limit. We are pushing the loss limit to 5% for the equity eval challenge. All right. You would be able to take quite a number of shots at this. The win rate for the opening drive, the back through open, and the opening, not the opening range break, but the opening drive and the back through open, that means within the first 15 minutes, is about 65%. All right. The back through open has a close, the opening range break with the right stats has a about a 55% chance of sort of playing out if all the pre-criterion are met. All right. As the session drags on, past the first 15 minutes, the win probabilities go down. So that's why if you ask me between catching an opening range break or capturing an opening drive, plus or back through open, which happens very often, I'll try to catch the opening drive and back through open as much as I can at the start of the session. Then I would use the opening range break to try to add to my position. All right. But again, this is equity day trading. Now, this was a very clean example of, all right, opens up, comes back down, and as it comes back down, this is one of the better looking patterns. Volume starts to fall. All right. Falls a risk candle here. Okay. And as you can see, once you have one candle, pull back. All right. In this case here, the moment this candle high sort of exceeds, you can take a position here, or arguably you could take your position here as well once this candle high. But for me, I would have, the moment I saw this and I saw this candle here, the moment it opened, I would have just hit the trade somewhere around here, use this place as a stop here. All right. First target, 50%. I would square, this case, I would square 30 to 50% here because, again, we have a nice volume spike. So indicating that we've got a nice breakout in play. But I would have squared 30% to 50% here. Okay. And then I would have wrote, you can see 9 EMA wrote very nicely. All right. And then I could have actually stopped out my position here, or, all right, again, what do we always go back to? ATR on the daily is 1.13. So the ATR was 1.13. 22nd of June, here. All right. So if the ATR is 1.13, one way you can square the other 50%, all right, is to actually measure 1.13 from the low. So 1.13, all right, so around here, you could have, all right, started to square another 30% of your position to 40%, and then leave the last 20% to actually just ride. All right, so you would have squared some here, all right, and then you could have let the rest stop out here. Sometimes the stock will just continue to run, surf the 9 EMA, all right. That would be institutional buying. So institutional buying tends to have a very nice straight line that stays above VWAP and surfs the 9 EMA almost perfectly. All right, so when you see huge institutional interest, that's what you see. It will be like a ruler that just goes straight up. The stock will never fall below the 9. It'll stay above VWAP all day. VWAPs reclaimed. Once reclaimed, they just keep going. All right, and every time they're tested, the VWAP, huge buy volume comes in. And similar again, what are we looking for? We're looking for VWAP to reclaim here. And then we are looking for, again, the 9 EMA to cross VWAP here. We can see here, 9 crosses. And you can see every time the 9 crosses VWAP, all right, the chart starts to accelerate. The volumes start to come in. All right, this is almost like a call to dinner bell. All right, when you see the 9 EMA cross VWAP, that's your call to dinner bell. All right. So, okay, I think that's all the examples we have for opening drives, back through opens, and opening range breaks. Okay, they're all kind of in the same category. So I want to ask at this time, anyone have any questions that you want to sort of like put in the chat, and then I can try to answer some of them. Any questions or any symbols you want to kind of go through just before we have about 5 to 10 minutes left? Any questions or any symbols you want to go through, just put it in the chat. IBM. Anyone else? Any questions? Okay, this I'll go through this topic a couple of times because this is one of the most reliable, the opening drive, opening range break back to open, one of the most reliable patterns to trade, and you can use them for equity eval prop. Now, this is a good question. 1 minute chart, or can you use other time frames? When you are doing your analysis for the day, you use the 1 hour chart and sometimes zoom out to the 4 hours. You kind of want to always, so what you would do is you say, okay, what does the 4 hour look like? So I get a picture of the big picture pattern. Okay, kind of get a picture. Oh, okay. Yeah, this looks like it's trying to bounce. It looks like it wants to try to make another corrective leg higher. So let's see. So, okay, I think I have a bias that this is now going towards maybe 296 as a bounce, potentially, all right? So this would be like IBM, all right? So you form a bit of a bias at the start, all right? But then what you want to do is for intraday, you want to zoom in, okay, 1 hour, so the thing about IBM is it doesn't trade a lot during pre-market, but if you have this, you can sort of see the range, then you just zoom into the 15-minute and then say, okay, what was the range that IBM was trading at pre-market? You can start to set your resistance points, support levels, something like this, all right? And then you can say, oh, okay, so what are we looking for? And oh, actually, this is quite interesting because IBM, as you can see here, again, same pattern that shows up again and again and again. What did we say? We are always looking for 3 to 5 minutes before an algo fake out, and then boom, drive at the open here. All right, so whenever you see an algo fake out, right, there is a higher probability of an opening drive. So you can see the first move for this was not up. The first move for IBM here, if you look at this 1 minute chart, was actually down. And then it went up. But look at it. The moment it came back, tested VWAP, this is your sign. The moment it tests VWAP, huge opening drive bar like this, just buy at VWAP. Then use the low from the previous candle as your stop. All right, so you would actually use this low here as your stop. And look at it, it just goes, and look at it again, once you see this 9 cross 2 minute anchor VWAP, look at that. You start to accelerate again, all right? And that's what you're always looking for when it comes to an opening drive or a back to open trade. Now, when do you switch time frames? Now, within the first 30 minutes of trade, okay, i.e. within 9:30 to 10 o'clock, stick on 1 minute chart. After the first 30 minutes, okay, after the first 30 minutes from 10 o'clock onwards, in this case, switch to the 2 minute chart for your intraday trades. All right, and as you draw closer to lunch, okay, so midnight our time, okay, switch to the 5 minute chart. Why? Because once you switch to the 5 minute chart, you get way less signals, which will tempt you a lot less to trade. The challenge with, as you can see here, once you hit 12, it's kind of dead hour, right? The challenge with putting a 1 minute chart or leaving it on the 1 minute chart when you move past, the first half an hour or the 2 minute chart and you move it past 11:30 our time, is that you get a lot of fake signals, false noise that can cause you to trade and do things you shouldn't be doing. This environment here is a consolidation, but it is one of the deadliest environments when it comes to day trading. Okay, people lose a fortune trying to scalp this back and forth. It's very, very hard to do so. I haven't seen many people do it successfully. I don't recommend you try it. And unless you have a huge cost advantage because of your broker, you're not gonna find it easy to make money here. All right. So anywhere after 11:30 New York time, as you can see, the volume only starts to come back around 2:45 to 3. In this case for IBM, the volume only came back around 3:30. All right. You're not going to get any big moves until about 2:45 earliest, or 2:45 p.m. New York time earliest. All right. So just using IBM as an example, since this was a chart that was asked for. All right. So these are just some of the tips that you want to keep in mind when you are trading the market. And let's say you say, I really don't want to stay awake past midnight every day to trade financial markets. Then really make sure you master the opening drive, back through opening range break setup. All right. This is a pattern that happens almost daily, and it is a pattern that is very usable for equity eval prop. And again, SpaceX is available for our eval prop accounts. All right. Okay. Are there any other questions or any other symbols before we sign off for the night? Just put them in the chat. Any other questions that you want to sort of like put in? All right. If not, we'll sign off for the night. Okay, Apple. All right, we'll cover Apple last, and then let's see if Apple offered anything for us to trade. All right. Okay, so Apple wasn't really in play, but wow, look at that volume. There was some news here. Okay, for sure there was news. Having said that, that's a huge volume bar. I don't know if this is a fat finger. This could be a fat finger trade. So when you see stuff like this, just know that this could be fat finger, yeah. Unless there was some sort of news, especially when it goes up and it goes down like that. Highly likely it's a fat finger trade. Okay, so again, let's go through the process of actually how we trade this. So we would zoom out again into the 4-hourly and say, where are we in the big picture? All right, so in the big picture, it looks like Apple is going through a correction. All right, the question then is Apple's correction complete? We can actually do some measurements. Okay, arguably it's kind of there already. So this can, in the back of our minds, either break out to new highs, or it could do this, reach here, and then go back down again. All right, where length of this next down leg is equal to the length of this down leg. Don't know yet which one is playing out. But what we want to watch for is essentially Apple's coming off the lows. We want to see some sort of like sideways consolidation pattern like this before another move higher. All right, and this is a very possible pattern that could play out in the next couple of days. Messy sideways chart. Watch for a consolidation and then push higher. The question is, how high can this push? So on the hourly chart, we can actually do some measurements. Now, at which point is the bear case likely invalidated past this 302.31 level? The bears are in big trouble. All right. Most of the time, this will not get up that high if it is still corrective in nature. And if we do a high-low fib retracement, this should get at least to this level here. Okay, with regards to where this could go to if corrective. So again, if corrective, all right, we are looking at this potentially going up and then coming off if it's corrective. But if this keeps going, okay, and exceeds 302, we could then see this start to really just go and go and go, and then the short's getting squeezed. All right, now let's see if on the intraday side, we will offer any opportunity sets. So 15-minute, there might have been an opening drive on Apple. So we zoom in on the 1-minute chart. Did we have an opening drive? Ah, very interesting. We did. And we had something again. 5 minutes before the open. Now we'll fake out here. All right, see, fakes out, drives. All right, loves to do this. But Apple stock wasn't really in play, so this is not a prime opening drive. It's just that this pattern showed up here. But again, very, very common pattern that shows up again and again. And the algos love to do this, institutional algos. Fake you out, then drive it open. All right. So you got to see how Monday plays out. This is not giving you any indication for Monday. This is a fat finger trade, most likely a fat finger trade that was being unwound, which is why the volume is like this. All right. This should not have happened. But yes, all right. This is exactly how this is a chart that actually was giving you an opportunity set. Watch for a similar type of pattern like this on Monday. But bear in mind that we have Iran in the background and the US in the background shooting each other again. All right, so just bear that in mind. But this opening drive pattern or this back through open could happen again on Monday or Tuesday. So watch out for it if you are trading this stock. All right. Okay. Getting kind of late for you guys. Thank you for your time. I hope you guys enjoyed this session with regards to the opening drive. And again, I'll go through these week after week so that you guys can get more confident with the pattern. Hope you enjoy yourselves and all the best for the remaining part of the competition. If you have bought any equity challenges and you like to include symbols, let us know. All right, we can find ways to include symbols in. All right, with that, have a great night, guys, and have a great trading week ahead. All right.